If you've been watching the precious metals market this week, you might say it's been a tale of colliding strength with uncertainty. Silver, that gleaming metal of industry and investment, continued its surprise ascent, holding steady near multi-year highs as demand from solar and technology sectors show no signs of slowing. And ETF inflows remind us that investors haven't forgotten its dual role, both store of value and strategic commodity. Gold, over here on the other hand, took its cues from the World Economic Pulse. After hotter U.S. data lifted the bond yields and strengthened the dollar, gold slipped a little bit from its recent optimism, a reminder that even haven metals dance occasionally to the tune of macroeconomic sentiment. And yet, even as prices juggled between bullish narratives and rate watch caution, there's talk beneath headlines. Talk of supply deficits, renewed industrial demand, and the broader narrative that when the world grows uncertain, people still reach for the metals that have stood the test of time. So whether it's a spark in silver prices or a reflection of gold's current tug-of-war with the dollar, the story of the week in precious metals boils down to this. Markets shift from day to day, but the fundamentals that underline gold and silver remain as enduring and strong as ever. Welcome back to our Wall Street Journal Market Report, where we're talking about your metals. We're talking about the market as a whole. Once again, this is sponsored by APMEX, the American Precious Metals Exchange. It's where I often go to buy my silver because as a collector, I want to make sure that I have cool pieces that fit my collection that I have never seen before, that aren't duplicates. So that being said, check out APMEX. I have a link in the description. It also looks like this on this QR code. And if you would like, you could actually now buy at APMEX by using this link, and it will support my channel as they will give me a small commission for every single person who purchased something using this link. So if you'd like to help this channel grow and become even more than it is right now, this is a fantastic way to do so because it costs you nothing, and hey, you get silver at the same time. But let's go ahead and look at what these wonderful markets did this week. I don't know if any of y'all were paying attention to the news this week, but there's a lot going on when it comes to economics and when it comes to the impact the news is having within economics. But basically, investor optimism broadened globally as sentiments improved with expectations in future interest rate cuts, as we all know, and the continued economic growth, encouraging buyers in Asia and Europe, which we'll talk about here in a second, to push equities higher. Traders responded to relatively strong corporate performances and easing monetary policy expectations, which supported gains beyond just U.S. markets. That's according to Investment News, who also said that strength in specific sectors like tech and cyclical stocks, along with positive data overseas, helped lift international indexes and sparked flow into foreign equity funds, even as global yields and economic indicators signaled more accommodating conditions. So that's all something we're going to see here because the world stocks have been doing awesome. I thought that they would be taking a small step back given the insecurity happening within Venezuela being a new thing. But you know what? It's going well. So all things considered, we're in a good spot. As you can see here, the Dow closed 49,504, up 237 points. That is a half a percentile. But check this out. We are now, as you see, 1926. That was yesterday, at an all-time high. How cool is that? We have a new ceiling here. As you see, the roller coaster has been ridden up to the peak. Let's hope that we ride here for a little while. We got the S&P 500 at 696628, up 44. And we have a 0.65% growth there. And as you can see, once again, 1926, we had an all-time high right there on Friday, which is just fantastic to hear. But the news doesn't always follow the same path because the NASDAQ here, 23,671, it was up 191 points, which is respectable. As you can see, it went up more than the other markets. But we're still looking at around Halloween for our all-time high, which you can see here. It's marked at 23,958, which I tried to estimate would be right there. and we are not far from it. So the issue being, it's been more than a couple of months, and so it's not on our little roller coaster here. It's way further back. But we should hopefully be there soon, which would be cool because the NASDAQ has been a little bit more cautious in its approach to an all-time high. As promised, look at the international markets here. Many strong things. We have Canada at 0.65%, Brazil 0.44%, Chile 0.12%, and Mexico 0.41%. So in spite of what's going on in Venezuela, those still all were in the positive, which is not something I necessarily expected. The EMEA, look at this, which is Europe, Middle East, and Africa up almost a full percentage point. Eurozone up a full percentage point. Then we had Denmark up 1.43. We had France 1.44, which is strong as well. Netherlands 2.40. What is going on in the Netherlands, folks? This is 2 weeks for them. Norway, which is big in the international shipping, 0.91, almost a full percent. South Africa, 0.96. Sweden, 1.17. Switzerland, a 0.5%. Turkey, almost a full percent. UK, 0.80. Well, that's one of the stock exchanges in the UK. The other one is 0.63. Then we go to Asia, where Australia just barely broke even, right under. We have China, 0.92. Huge growth there. We have India, which was one of the only big negatives here, which is negative 0.72. We have Japan up 1.61. We have South Korea up 0.75%. So as you can see, tons of amazing movement happening in the international markets, which is not something, like I said, I expected given the recence of what's going on over there in Venezuela and their impact, especially when it comes to the dirty crude oil that they make that needs a big distillation process just to make them able to use such oil, because it comes out pretty nasty and you have to use distillates to make them worth your while. So that being said, but let's look at your metals. This was another fairly big week when it came to movement, as we started the week at $73.89 in silver, and we ended the week, as you see, at $80.63, which is a gain of $6.83, which would be crazy if we haven't just survived the past 3 months of price hikes in silver, but that is still a 9.25% gain on the week. It doesn't necessarily translate year to date because we're so early into this. It's not like silver is much higher than its all-time high right now, but it is still notable because it seems to be staying in the mid 70s to low 80s as a new normal, at least until I would assume demand is somewhat caught up with. All right, but what about gold? So gold started the week at $4,427, and is now $4,526, which is a gain of $152, and that is 3.5%, which is also respectable. As we see, silver is the winner of the week, though markets are up. Silver is up, gold is up, the dollar is flat. So I would say for the most part, everybody but the dollar has won. So if you've got silver, great. If you've got gold, great. Hey, if you've got platinum, they had a great year too. If you've got copper, still going up, though it's probably not very likely that you should start storing it because you're going to need 15 warehouses to have any value. But that is what we have for you today. Thank you so much for watching. And please remember, as always, to stay classy and current with the culture of currency.